All right, thank you for staying with Daybreak. Let's start that conversation and ask you to let us know what your thoughts are on where do the opportunities lie in 2022, considering it's an election year as well. At Trevor Mbija at Citizen TV Kenya, use the hashtag Daybreak. We're talking about business and everything in between there. Joining me now is Waithaka Gatumia, is the CEO of Centonomy. Reginald Katzutu is also joining me, the CEO Amana Capital, is joining us from Oxford. We're still waiting for Bide Mwemo, an economist. As soon as she comes in, we'll rope her into the conversation. And Honorable David Osianya as well, who's the CAS Trade and Industry. Let us know where they think the opportunities lie. And I'll start with you, Waithaka. Where do you think the opportunities lie in 2022? It's an election year. Everybody's wondering, okay, so what do I do? Do I just keep my money under my mattress, or what happens? Do I invest? What happens then?
First of all, thank you so much for having me, Trevor. I really appreciate it. Good morning and Happy New Year to everybody who's watching. If you've not met, I know there are many friends. Because of COVID, we've not seen each other.
Yeah.
Where do the opportunities lie? Look, we are familiar with the Kenyan market. We are familiar with the shifts that happen during an election year.
Yeah.
So I know the people in the communication space at this moment are raking it in. In fact, if you think about it, this is the year that they make their profits and they wait for another 5 years. Yeah. Printers, people who are producing merchandise, people who are supporting political campaigns. So there's opportunity in that space.
Yeah.
Just remember that also, and I'm sure my colleagues on the panel will also agree with this, because this is a year of uncertainty. The market tends to be volatile, and in volatile situations, you can find very good opportunities when it comes to the investments on the stock market. So opportunities are out there, Trevor.
Yeah.
But you see, when at Centonomy, we speak about personal finance. And the difference is we are different. Trevor, your opportunities are not the same as mine.
Yeah.
Your networks are not the same as mine. Your gifts and talents are not the same as mine.
Yeah.
And so when we come to an investment opportunity, it is dependent also on your abilities, your skill set, and the resources that you have. So don't be looking at what everybody else is doing. We are unique. Obviously, there'll be general areas of opportunity that are out there. But Trevor, if I'm a speech writer, my opportunities are now, because there are many speeches being spoken.
Yeah.
But if you're not a speech writer, don't try and think that you're going to get into that market. You don't have the goodwill, you don't have the abilities, you don't have the talent.
Yeah.
And so it is vital for every Kenyan to look at themselves and say, how do I match my skill set, my network, and what I've built over the last couple of years, that goodwill, in order for me to make the best investments ahead for me.
Yeah.
Yeah.
Reginald, what are your thoughts on this? Where do the opportunities lie this year?
That's a very interesting question, Trevor. And my colleague from Centonomy has looked at it from a short-term perspective, as in how do I make money this year and wait for another 5 years. I would like to look at it from a macro perspective, as in what positions can you put yourself in this year that can either catapult your business into the future or make you ready for the future. And any investment that you make is subject to the economic environment that you're going to invest in. And that economic environment doesn't look that rosy. Number one, because of the incumbent is not running, so there's a lot of policy uncertainty. Will the new government continue with the same policies, with the same programs, and will we have the same level of government investment in specific areas? Number two, it doesn't look that rosy because we are under an IMF program, which is more of a fiscal consolidation program. That means the government is not going to be spending much, but they're going to be cutting down on spending. That means that aggregated demand that comes from government spending is also being curbed, or is also reducing, so to speak. But in all this, the most opportunities, or the areas that opportunities are presented, is that one, because of that fear and uncertainty, you will find either prices stagnate or prices actually deflate. Yeah, especially in the stock market. So it presents opportunity of picking up viable investment, whether it be land, property, people who are fearing political violence moving from certain areas, investors shying away, foreign investors who drive the Nairobi Stock Exchange shying away because of all the policy and uncertainty and things happening in the market, you get an ability to be able to buy things at a cheaper price now. But if you then go into the same boat of uncertainty and fear and say, I'll wait until after the elections, then you'll be missed an opportunity of buying, whether it be property, real assets, or financial assets, currently at a cheaper price. If things go the way they normally go every election cycle in Kenya. If then you are a bigger business, then you are thinking and saying to myself, okay, what do I need to do for the future? If you look at the speak or the talk coming from both political sides, there are elements of some social programs, whether we support that or not, that all of them seem to be espousing to be implementing when they come into power. There's an element of going down to the grassroots or to the people in terms of moving from mega projects to more to micro projects. So if you are a business, you are thinking, am I best placed being situated where I'm situated, or do I need to move to Mombasa? Do I need to move to Kisumu? Because I believe starting 2023, depending on who comes into power, devolution is going to play a bigger role. So you'll see more things being done in the devolved units than from the devolved from the national or central level. So if you are a business, you are thinking, how do I set up myself to benefit from growth that will happen in Murang'a or in Kericho or in Kajiado? What are they trying to do there? So, for example, an insurance company and all your customers are currently based in Nairobi. How do I set up to benefit from the 2 million eligible people that I might find in Western who are not currently insured? And I think when we start having mindsets such as that, you'll find this year becomes a more exciting year in terms of people laying a platform rather than going for short-term printing gains, speech writing gains and all. But even as a speech writer, how do I set up myself to make sure that I'm continually writing speeches for the next 5 years by developing networks now?
Okay. With that analysis, let me bring in Bide on this. Bide, where do you think the opportunities lie in 2022?
First and foremost, Happy New Year to you, and good morning to everybody else. I think let me ride on to the conversation that Reginald has just started in terms of the opportunity set to diversify your basis of investments or your basis of earned income. I think if you're looking at this year, you have to ask yourself first and foremost, where am I at from a financial perspective? Can I be able to afford to invest? Where is my earning coming from? If you're looking at investment opportunities, I think as we get into a bit of volatility in the year because of what's happening globally and possibly because of the election cycle, there will be spaces to pick up stocks, to pick up assets that you can actually buy on a cheaper rate and invest for a longer period. I agree with Reginald in terms of real estate. I'm looking at dividend earning stocks on the stock exchange. I'm looking at also opportunities of low income housing. Can you come together as a group, put some money aside and be able to set up houses in different spaces? And we're seeing many landowners saying we can be able to lease the land to you so you don't necessarily have to own it, which actually reduces significantly the entry cost in terms of that investment opportunity. When it comes to businesses, I think you look at all the data that's coming out and all the reports that have been done, Kenya is largely dominated by micro businesses. I run a business and we're probably 2 or 3 of us who come together and run a business. Now the question is, how do we sustain this opportunity set? Beyond looking at devolution, I think there's an opportunity to look at the region as a whole. We have seen DRC, which is going to be included in the East African community. DRC has 90 million people. So even as you're thinking about your business, this is an opportunity to ask, how can I get into the DRC market? We had gone with the Equity Bank Trade Mission last year, which was facilitated by the government of Kenya and DRC to understand how does this market operate, what are the opportunities there. So even as you're thinking as a sole entrepreneur, as you're thinking about diversifying your business, diversifying your income opportunities, on a longer term basis, there's an opportunity to understand what's happening in DRC when it comes into EAC. What are the opportunities for me? Can I sell meat in this market? Can I sell chicken? They love eating chicken in this market. market? Can I sell services? Because there's actually a deficit of service providers in that economy.
Okay. But Waithaka, you know, there's an issue of policy uncertainty, and it's a year of elections.
Yeah.
Would you advise someone to just lock down and watch what happens first? Because there's a chance of either making money or going at a massive loss, depending on what you invest in.
Yeah, I may be poorly quoting him, but Warren Buffett talks about the fact that when everybody is being very generous, that is a good time to be mean. Yeah. And when everyone is being mean, this is a good time to be generous. What is he trying to say? Yeah. He's saying that when everyone is holding back, that means that there are opportunities. What does that, both my colleagues here on the panel have tried to say that you can possibly pick up shares on the stock market at a discount. What does that mean? It means that because everybody is holding back, there is no demand in the market for that share. It doesn't mean that the fundamentals of the company have gone down. What does that mean? The business still has its customers, it still has opportunities, it is still growing, it is valuable, but because everybody is holding back, the share price has not moved. Yeah. So in that moment, now it means that you're actually picking up that stock at a what? A discount. Now, as a layman, if you're sitting there at home and you're watching and you're wondering now, how do I know whether it's discounted or not? That is what professionals are out there for. Yeah. And it is vital. Go see your stock broker. Ask them, which are the stocks that I should be able to do? A big mistake that we make as individuals is we try and do these things ourselves rather than consulting professionals. Yeah. Same thing with real estate. I love the comment that you said. People are under pressure at the moment with real estate because of that uncertainty. So they may be willing to sell you that property at probably a lower price than what the market would have normally done. Those are the opportunities that we're looking at. It is difficult for I as an individual to try and map out the policies that you have just said and try and say I'll have influence over the government other than through my vote. Yeah. That is my only level of influence. But I can listen, as we're seeing now, even as the comments that are coming here, and try and anticipate where those opportunities would be.
Yeah. Reginald, do you agree in terms of policy uncertainty? Do you then look at other bigger investments, or what happens? What about the smaller kind of people who have just a few shillings to spend here and there? Where do they start?
It's an opportunity. I think the problem that we have, Kenyans are good at Harambee when there is a problem, but not good at Harambee when there are opportunities. And that's where actually that culture for Harambee should actually be coming into. How do we come together and identify an opportunity that we are all either convinced about, or an opportunity that we are willing to go in together. So you as Trevor, you may not get an opportunity to set up maybe a whole bakery in Bugoma, so to speak. But if you get 4, 5, 6 other presenters, journalists, TV crew from cities and say, guys, come. You know, these chamas and circles people like to come up with. If you come together, your 1 million Trevor and 8 other people becomes 8 million shillings. With 8 million shillings, then you're able to do something that you're not able to do by yourself. Number one, what you have done, you have diversified your concentration risk, in that you are not the only one doing the venture, so that if you had 10 million as Trevor, you're only using 1 million of your money into this venture. You still have 9 million where you can use it elsewhere. And I'm just using the figure of million. That can even be thousands, 100,000s. Even when you're going to buy stocks, with my 10,000, I will most probably buy a stock that everyone else buys, Safaricom, for whatever reasons. But if we are 10 of us and we have 1 million, we can now say, okay, guys, let's buy a bit of Safaricom. But because not of wanting to have concentration just on the telecoms, maybe we want exposure to the financial sector. Let's use 200,000 to buy an insurance company, whatever stock you're going to buy in the insurance company, Britam, CIC, or you then see another 200,000, I'm going to buy ABSA or StanChart, whichever. So if people are able to come together, and then you're able to actually take advantage of larger opportunities than trying to go on it by yourself. Yeah. So opportunities present themselves, come together with like-minded people. Don't bring together short-term people with long-term people, because you'll always be fighting and quarreling. And whenever you are making an investment, always have a long-term perspective to it. So if it's a stock, you're looking at the fundamentals. Yes, things might be hard this year, but is it generally an industry that whoever is going to come into power will still have to continue?
Yeah.
But if it is an industry that has been built on patronage on the political party that is in power or the person that is in power, then you might be actually advised to divest away from there now than to remain in it. So there's a lot of analysis that has to go into it, starting from the general economic level as you break it down to come lower to select what to buy, what not to buy, what areas to set your foot in now, which you will benefit later. So long term, come together and take advantage of the opportunities that the colleagues have mentioned.
Yeah, which brings me to my next question, which I'd like all of you to delve into, and I'll start with Yumbi there. So should you diversify or focus on the one thing you're really good at? Should you have a bit of fish here, a bit of chicken there, a bit of eggs, a bit of milk, what we call side hustle, or just focus on the one thing you're good at and give it your all?
Trevor, before I answer that, can I just chime in into the policy uncertainty and what does that mean for you as an individual? Then I come to your question. So for policy uncertainty, what you really want to understand as an investor is really what's the outlook of interest rates, inflation and currency, because all of this will have an impact on your investments. So you can't look at Kenya in isolation today. You have to look at Kenya in terms of what is happening globally, and more importantly, what is happening in the United States of America. So what is happening with the Fed rate there? So rates are going up. What does that mean for us? There could be a possibility of interest rates going up. Inflation is also going up. When you look at it in that sense, then you ask yourself, what does that mean for me as an investor? Two things. If I'm going to be funding my investments via debt, if I'm taking out loans, there's a possibility that there could be an adjustment on the cost of debt. What does that mean? If I'm looking at investments, then I want to look for investments that give me a slightly higher return. On the flip side, if I can be able to actually watch on my consumption and actually probably save more, because we're in a space we're getting into politics, there'll probably be higher taxes. What you're paying at Naivas for your groceries or any other supermarket or any other place, you'll probably pay more. So if you can actually watch your consumption, then that brings you to the level of how do I then invest? And then the second part of this conversation is to ask yourself, who am I? How old am I? So Kenya's population today, majority is 35 and below. We have a good chunk at the age of about 20 to 24 to 28. So if you're in that space, you're lucky because you don't really have dependents. So if you're earning income, there's so many opportunities to either earn income if you're already not earning, or there are spaces for you to say, where can I invest in? So I've heard all of us talking about real estate and talking about stocks. Maybe that makes sense for people who are 30, 35, 40 and going onwards. But there's this bunch of people who are a bit younger and they have the flexibility to take on more risks. So we are seeing people then beginning to ask, what are the alternative investment opportunities there? Things like crypto, things like buying stocks in the United States of America, because technology is allowing us to be able to do that. So that you're asking yourself, am I only limited to the geography of Kenya today, or can I actually invest in understanding other opportunity sets and looking at them? But it has to boil down to where am I at more specifically. Yeah. Now to your second question of diversification. When you're going to start your investment, and I think we'll probably agree with the team from Centonomy, we tend to decide, I am investing today. But you haven't asked yourself, are you even able to afford to invest? Do I even have income? Do I have surplus? Am I putting money aside? Have I been able to build an emergency fund? So that investment is not just a feeling. It has to be a feeling that's a rational decision based on, I have income, I have looked at my expenses, I have a budget. Based on this, then I'm able to release some money. Then the next question you want to ask yourself, how do I want to build my investment portfolio? It's very important to diversify, but I can't be my first investment today and then I'm diversifying. What are my target returns? So that if I'm going to be building my investment portfolio, I'm saying maybe over a 2 or 3 or even 5-year period, I want to have something in real estate, I want to have alternatives such as Bitcoin, I probably even want to have foreign stocks, I want to have local stocks, I want to have real estate. But you want to start off from a place that says, because this is my minimum capital, I want it to be a base, let me earn from this, then as I earn, I keep diversifying and looking at other asset opportunities.
Yeah. Wedaka, what do you think? Diversify or stick to what you're good at?
Have a strategy. I think that's what we're trying to say here, is that it is not simply just doing one thing. The strategy is based on your goals. What do you want to achieve? You see, The problem that we have, especially around our personal finance, Trevor, is that we are very general in our statements. As you said, I want to invest. No, or something like, I want to own my own home. That's a big investment goal that people have. But you have never defined which home, where is it, how much does it cost, and by when do you want to get there? Now, if I have that goal, let's say it is a 3 million house in Syokimau, and I want to have that house within the next 10 years. Now we can have a discussion about how we diversify in order to get to that place. Because I have a specific goal. The problem is we don't have goals. Most of us we are investing because we have been told we need to invest. Good, for what? For when? So when I know what your ultimate goal is, then you diversify. Why do we need to diversify? Again, complex words. Diversify means to have multiple sources of income, multiple investments, having different investments, so that, for instance, if my property doesn't have a tenant, I have investments in the stock market that are still growing. If my chicken business is not running, I'm still getting income from my job. That's diversification. Now, here's the thing. Why are you why are you being driven into these investments? Because if you know why, then, and the ultimate goal, then you're able to choose the diversified investments that you want. There are some fundamentals, though. You need savings. Where do you put your savings? Where there's security and where there's access. Where you put your savings, you're not too interested in whether you're getting a high return. You don't want your savings in a place where you're going to hear, 20% return. Because there's higher risk. You want it somewhere where there's security and access in an emergency. But then at the same time, we have to multitask. We need to have investments that are giving a compounded return over time. Because otherwise we will not be able to defeat this monster called inflation, where the price of goods and services are increasing over time. So if you are not investing in other investments that are growing faster than inflation, then you're also going to find yourself in an issue. But it all starts, Trevor, with what do you want? Because when you know what you want, then you can be able to put a strategy to get you to that goal.
All right. Reginald, what are your thoughts on that?
I agree. My philosophy is always goal-based investing or goal-based saving. So you're putting your money aside towards a goal, and a goal has to have a financial implication and also has to have a time implication. Diversification, when people talk about diversification, you're actually diversifying risk. That's what you're actually diversifying. So that means you have to understand the risk of each investment that you are taking. So even as you're putting money towards different goals, if they are short-term goals, then your money needs to go into short-term investments. Don't buy stocks to pay school fees next month. Don't buy crypto if you don't understand it. So when you're diversifying risk, which means understanding the risk you are taking in whatever investment. Even if you're doing goal-based, as just mentioned, you need to be able to tie an investment with the tenure of your goal, with the return commensurate to that goal. So that's at an individual micro level. As a business, specialization might be actually a better way of starting or growing a business, and you diversify as you go along, either diversify along the value chain, so you're still most probably in the same industry, but playing maybe on the different elements of a value chain, whether it's upward integration or downward integration. But you realize you cannot be a jack of all trades and then a master of none. So if you are a computer chip manufacturer, you'll want to specialize there so that at least you are a key player in the computer chip manufacturing. Then you can decide to diversify maybe either upwards. Who are people using the chips, or the guys who are making phones? Can we make our own phone, so to speak, or can we make screens for phones? So then that way you're doing an upward integration in your business. So it depends whether you're an individual or a business when it comes to talking about diversification, because then you have limited resources. Your resources are not infinite, they are limited. Because your resources are limited, you cannot then spread thin the money that you have, then it also affects the amount of return, quality, and things that you're able to do in your business. You mentioned that because of policy uncertainty and an election here, do you need to diversify? Not really. Most of the time, actually, you need to, one, consolidate, make sure that your investments are one, you have actually ramped up investments to be able to survive any shock that will come. Especially for businesses, especially small businesses. During this period is when you need to make sure that you have enough working capital to withstand any fiscal shock, government not spending, or demand shock if things go haywire in August, and we pray that nothing happens. But do you have enough working capital to be able to survive during that period? Because most businesses then collapse if anything happens in the event of 2007 and 2008, then you find some businesses never actually come back again after that. So as a business, what you should be thinking of, am I resilient enough? What are my risks as a business as I enter into 2022, being an election year and a change of government, and we hope your business was not built on patronage on whoever is in power or the party that is in power. Then at that point in time now, you want to make sure that, yes, diversification starts making sense. You want to make sure that you're getting contracts from somewhere else and not just from the government.
Yeah.
If the person is not going to be there coming forward. So the dynamics are a bit different from a business perspective and from an individual's perspective.
Yeah. Trevor, if I may, just very quickly on that, businesses often, and especially smaller businesses, as you mentioned before, our economy is based on micro businesses. And micro, small, medium-sized businesses. That's where you're finding most of them.
Yeah.
A lot of these businesses don't have the same fundamentals, such as savings. It is shocking how many businesses, if you're talking about preparing for risk around this period of time, put money aside. Not every shilling that comes in is for the directors to draw as their dividends at the end of the year. Please, if you're running a business, if you're running a chama, have savings for your business and your chama, because you even at a business level, it is important to have those what they call cash reserves. Cash reserves are simply savings.
Yeah.
It's money that is available for times like this. I thought I should just add that.
Yeah, sure. I have to take a quick break now. When we come back, we're still talking about where do the opportunities lie in 2022. Should you lock down and hold your money and stay still, wait and see what happens, or should you invest? It's a catch-22 situation, but that's what we're trying to go through. I can see a lot of your feedback coming through at Trevor Mbija at Citizen TV. Can you use the hashtag Daybreak? I'll read some of them when we come back from the break.